record. Good afternoon, all. Deviate is going to present the session with whatever topic was picked for today, and also maybe in next few days we'll plan what are all the topics that can be covered, if possible, and align and make a proper plan. Before Deviate is going to take over. Everybody is on mute. At the end, once he completes session, whatever 15-minute, 20-minute question and answer time he has planned for, we'll cover those questions possible in the time period. We all have a lot of questions to be addressed, but we'll stick to the topic, cover what is required, and then eventually, based on users' feedback of what is required, we'll plan the topics. That's one plan. Another one, everybody who joined today, if possible, please do give some feedback if you think the valuable information is found. It's not just for the feedback is not for we're trying to elevate, but sometimes some appreciation will motivate the person who is doing it. That's one, and actually indirectly it helps a lot of other people who missed it to know the value. That way it motivates them. That's the main idea behind this ask, right? It motivates. That's how I got motivated, to be very honest, but my story will keep that aside. So that's one. And also, whoever joined today here, if you are not part of any of the groups, there are 7 groups or channels, whatever you name it. All you need to do is log into www.thinksabio.com, go to the community page, and you will be able to join there, provided some people don't want to do options, so you want to exclude yourself from that environment, which is fine. But if somebody was interested, unfortunately you don't know how to do that, that's the path. Go to www.thinksabio.com and join all the 7 groups, whatever are available. Each one has its by name itself, you can tell what it does. And I got an update from Sai last few days. They're trying to improvise as much as they can and be much cleaner. It's all experience from feedback, etc., etc. On that note, it's over to Deviate. He's going to present, and then we're going to have question and answer. At that point, we're going to take questions maybe by raising a hand or through the chat, whichever works best for all of us. We'll plan for it. Over to you, Deviate.
Yeah, thanks, Danu. So we'll take the questions from the chat. Anyone who has a question, just paste in the chat, and we will try to answer all the questions. If by any chance we reach the time and I couldn't answer the question on the chat, then you can post it in the Telegram group, and then we'll be more than happy to answer those questions. All right, so let's get started.
Right. So since it is said to put it on the chart, don't put it now, that way we miss it. Hold your question, type it out, whatever, if possible, and then we can address maybe in next 30 minutes later. Just a pointer. Thank you.
Right. Yeah. Thanks, Dana. Okay, so let's get started. So today we're going to look at Bollinger bands and Keltner channels along with TTM squeeze, and see how we can develop a strategy using these indicators we have, these tools that we have that are built in Thinkorswim here. So before I step into the Bollinger band or Keltner channel, I want to quickly run through this screenshot here. So what this is basically a standard deviation, and I think we have gone through this in the first session that we have explained here. But let me go through this again. This is very, very, very important here. So what standard deviation means is, like, when you have a 0, which is the mean, a price will fluctuate between -1 standard deviation and 1 standard deviation by 68% of the time. So the price will stay in between 1 standard deviation around 68% of the time, and the price will stay in between the 2 standard deviation 95% of the time, and then the price will stay within 3 standard deviation around 99%, 99.5, and 4 standard deviation 99.999% of the time. So this standard deviation not only applies to the stocks, it applies to many things out there in the world. And if you actually look at it, this is also called the bell curve. Many of you are in IT profession, and you know how annual merit happens, right? It's a bell curve, right? So the first one in the team, the last one in the team will be 0.1%, and then you will have, people who have successfully met their goals around like 68%, and then you will have the exceeded expectation guys within this 28% range, and then there will be top performers who would be meeting this third standard deviation here. So this is in general, this applies for everything, right? Like it applies for the population metrics, it applies for everything and anything within the world. So this is very important. And stock market is it basically follows. I mean, stock market also follows, the price also follows the standard deviation. And the way that the market measures the volatility of a particular stock is measured in terms of standard deviation, right? So let's go back to the chart and see what standard deviation is. And this is something that we have gone through in the past, but I want to go through this again. So standard deviation channel, if I add, the default is going to be the 21-day length would be the mean, and the deviations would be 2 standard deviation, right? So if you basically plot it on any stock, right? I mean, this is Lucid, for example. If you look at SPY, you see that majority of the time, SPY is basically trading within 2 standard deviation. If I basically add one more standard deviation for, and change the color here to white, line and lower line to white. So the white line here is 1 standard deviation, and the yellow line here is 2 standard deviation. And if you can see, like most of the time, SPY is actually trading within 1 standard deviation, right? And then if you look at any stock that's slightly volatile, for example, Ford has been volatile recently, but for the most part, if you see, it's trading inside this 1 standard deviation. It's just statistics, and these bands expand and contract based on the volatility increase, right? And once it crosses the 1 standard deviation, it tries to touch the 2 standard deviation. And if we take more volatile stocks, for example, they basically try to trade above 1 standard deviation for the most part. And this is just statistics, and there is no hard rule here. Like, for example, you look at stocks like GME, they have, they basically touch the 4th standard deviation, and sometimes breaches that as well. So it's not a rule like, okay, once a stock touches that 4th standard deviation, but it's a model, it's a statistical model. Many market makers use this implied volatility tool to measure the volatility and then hedge their positions that they are selling or buying from retail traders, right? So this is basically the standard deviation bands that we have. The problem with using these standard deviation channels is like, when the implied volatility increases, the bands, these 1 standard deviation, it will actually expand it over a period of time. And if you think the 2nd standard deviation for this particular stock GME is 308, but then if it makes a huge move up, tomorrow this will go from 308 to 380 or something like that. So there is a flaw with the way that we have the standard deviation channels presented in the tools that we have on Thinkorswim. So there is a guy called John Bollinger. He's what he did is he has created a thing called Bollinger Bands. And what Bollinger Bands does is it basically tracks a simple 20-day moving average, and then it plots the standard deviation above the 20-day moving average. Instead of plotting a straight line, it will basically take the simple moving average of a period of 20, and then it will basically plot the 2 standard deviation above and below the mean. And the mean in this condition is 20, right? So what's mean? Mean is the 0 right here. So here, the Bollinger Band uses the 20-day simple moving average as the mean, right? So basically, if we, I don't like this color, so I'll just change it. The lower band will be red and the upper band will be red. So I'm not changing anything. I'm just leaving the 2 standard deviation and a 20-day simple moving average. I just changed the colors. I did not change anything. So this is what the Bollinger Band looks like. And let's look at it on my stock, something like this. So what Bollinger Band does is it basically plots the standard deviation. Like we said, standard deviation tracks nothing but implied volatility. When the implied volatility is high, meaning when the stock is making big moves up or down, the bands will expand. See, the bands are actually far away from the mean, which is the 20-day simple moving average here. But when the implied volatility is low, meaning when the stock is making small moves, it is close to the mean. The standard deviation bands, they are close to the mean. So in simple terms, if the standard deviation bands, which are these red lines here, are close to the mean, that means that the stock is either trading sideways or it is actually going up or down slowly, right? When we are trading options, we want the stock to be making big moves. We don't want the stock to be going up slowly up unless we are purchasing leaps or far out of the money calls or puts, right? So we want some action. One way to measure the action is if you're following this stock, for example, Ford, you will see there is a big move here in the last 4 or 5 days, and then the bands have expanded. What that means is that there is a volatility increase, and instead of the stock moving $1 or 50 cents every day, there is a chance that it can make a move up to $2 or $3 here, right? So the range of the stock has expanded significantly, and you can look the same for Tesla as well. See, the bands are close to the mean, though it is on uptrend, it is actually moving slowly. But when it made a big move with gaps, the bands have expanded. That means the stock is actually going to make a big move here. Let's just assume that you are here, right? And then you can see that the band distance between the simple moving average here is actually higher than any of the lengths here in the past for like few months. So you can basically say like, okay, Tesla is going to make a move because there is a gap up, and then the bands are expanding, and then it is actually above the band, which means you are bullish. And then if the price is below the band, that means we are bearish, right? So just look at it like this, right? See, the bands, the standard deviation bands have contracted, and it means like it has come close to the 20-day simple moving average. And then here, if you see, they have expanded, right? See, you see this decline here, and then the price is breaking to the downside. See, this is the upper side, this is the downside. The price is breaking to the downside, and as you can imagine, the price has significantly gone down. And then when do you know that this move is done? Is when the implied volatility will come down. That means it's trading sideways, right? And then ideal conditions, it's better to lock profits somewhere down the line when it is going down, not to give up everything when it turns around and starts a bull run, right? So this is basically how we use Bollinger Bands, right? So we look at the bands, we see, okay, so the bands are closed, and then once the price is starting to break, and you look at these bands, they are expanding, that means it's going to make a big move up, right? And it's always important to lock some profits while the stock is moving up, so it will not turn around and reverse on us, right? So this, in a nutshell, is Bollinger Band, right? We can use it on daily charts. We can use it on 1 day, 1 minute charts. We can use it anytime, right? Like for example, if a stock has moved up significantly, let's look at it, right? Let me take you an example here, which is a perfect example, right? If a stock has made a move significantly up from here all the way here, it basically, what it does is it consolidates for some time. Some stocks will just come back down, and there are many stocks like that. For example, we can look at TTD. For example, right, it just went up, it couldn't consolidate sideways, it just came down. We'll look at one more example where the stock has, moved up, uh, moved up from here to here, consolidated sideways, good earnings, again shot up. It is actually trying to make one more consolidation. As long as it doesn't break down, it's fine. Again, here, HT moved up, traded slightly sideways, and then made another move sideways, and then moved sideways, and then moving up, right? Stocks basically move like this. They cannot just go straight all the way up. They have to move up, trade sideways, move up, trade sideways, move up. That's how stocks actually make moves over a period of weeks, months, and years. That's how they move up. At the same time, that's how they move down as well. And we can look at some examples at the later point. But for now, what I want to show you guys is like, this is basically Bollinger Band. So when you see the implied volatility going down, that's when you will be watching the stock, and then once it fires with a gap here, I mean here there is no earnings, it just fired up with the gap, and then you can see the bands have expanded here, and then that's where you get into the stock, and then you just ride it all the way up, and then lock profits as you go up every single day, right? Like if you have like 5 contracts, sell one of them here or 2 of them here, sell one of them or 2 of them here, and then sell the rest. It's usually better to close the position within the first 5 days, and then leave. If you have any free runners, you can just leave them for the rest of the days to see if it will make a bigger move, right? So this is Bollinger Band. Now, for some people, it's just hard by looking at it like how low is too low, right? Like it's here. It can go somewhere here. Some people try to, pull the trigger ahead of the time, and to make things easy, one of the guy, I think his name is I forgot who prepared this indicator called TTM squeeze. So what he did was he basically mixed Bollinger Bands with Keltner channels. What Keltner channels does is Keltner channels basically tracks the average true range of all these stocks, right? So what it does is basically it tracks the average true range. If the true range is increasing, expanding, the bands will expand. If the true range is decreasing, the bands will go down. What is a true range? True range is nothing but if a stock moves 1% up or down in one single day, and then if that's the average of like last 20 days, then the ATR of that particular stock is 1%, right? If a stock moves up or down like 10%, and that's the average move for the stock for the last 10 days, the average true range for a stock is 10%. The stock makes a move up or down 5%. And if that's the case for the last 10 days or 20 days or 30 days, the average true range of that particular stock is 5%. So Keltner channels basically tracks the average true range. And one of the best ways that, I forgot his name, I think his name is John as well, John Carter, I think. So what John Carter did was he basically mixed the Keltner channels, which is this white line here, and then the red line is Bollinger Bands. So he came up with a theory when the Bollinger Band goes inside the average true range, meaning the implied volatility is less than the average true range of the particular stock, it tends to make a big move pretty soon. And then we can clearly see that when the red line is crossing the white line. So in other words, when the red line is crossing the white line, that's your buy signal, because you had a move and then you had a sideways trading zone here, a consolidation period, and then the implied volatility has gone within the true range, and then it has fired up again and here again, right? So let's look at some other stocks. Let's look at this Apple here for some time here. So let's look at the recent move that we all have traded at one or the other points here, right? See, the Bollinger Band actually came within the Keltner channel here, the white one. And then when it has crossed it, Apple made a big move. Same thing here. Bollinger Band went inside the Keltner channel, and when it is coming out, it made a big move, right? So let's look at some other example. Let's see if Tesla made that, right? It made several times, right? So here, for example, the Bollinger Band went inside the Keltner channel, and then once it came out, it made a big move, but it took some time, right? Now there is one more thing that the greater time the consolidation happens, like the longer the Bollinger Band is within the Keltner channel, the bigger the move is usually what it is, right? So it's just not like, you know, every time it goes inside the Keltner channel, every time it goes up. It doesn't just work that way, because if you basically trade a low ADR moving stocks like Bank of America, there's no setup. I mean, it's pretty choppy. It's just going in, it's coming out, it's going in, it's coming out, it's going in, it's coming out, right? So we have to find some setups where there is an explosive move, and then there is some kind of consolidation that's happening, right? So if you look at Lucid here, we had a 1, 2, 3 days gapping up on Lucid here, and then it consolidated to sideways. And look, the Bollinger Band went inside the Keltner channel, and that's when it made a big, massive move. So what happens is, like, sometimes it's very hard for us to catch the first move, but then that's okay, because once you see a stock is gapping up very rapidly, it usually consolidates to the sideways before it makes a big move. This is like, you know, giving us an alert shot, like saying like, hey, look, have me in your watch list, and then you can just stay there. You don't have to buy here, because your theta will kill you if you buy a week away or a month away calls. So you have to wait for the right time where the Bollinger Band comes under the Keltner channel and then leaves it. That's when you have a massive move. I think it's the same here as well. So it's actually, I don't think I can go back, but then once it's actually moving up, it made a massive move. News will also help, but then strong stocks tend to make moves over a period of days, weeks, and months. They really take time to basically trade, right? So what John Carter did was he basically mixed these two, because I mean, this looks so clumsy here, right? So what he did was he created an indicator called TTM squeeze, and then it's a default indicator within Thinkorswim. You can just type TTM and you will get many of the TTM indicators. You can just click select the TTM squeeze and then just add it, and then just apply it with all the basic settings. What it does is the TTM squeeze indicator, every time the Bollinger Band goes inside the Keltner channel, it will plot red dots on this line here. And every time the Bollinger Band leaves the Keltner channel, it will fire the green bars here, right? And then it will also, the TTM squeeze will also check the momentum based on whether the stock is in a downtrend or if the stock is on an uptrend. So how can we use this, right? So we can use it in a couple of ways, right? First, you pull up any stock that you like. It made a big move. Now you don't know if you want to trade it because it already made such a big move from here to here. You don't know if you want to enter anywhere here, right? It's just going sideways, right? So what you can do is you can wait for the squeeze to happen and then buy in the direction that you want if the momentum is also in the direction that you want, right? So for example, you're bullish on HD, and then you will wait for the TTM squeeze to happen, meaning the Bollinger Band will go inside the Keltner channel, and the TTM squeeze is turned on, and then the TTM squeeze has fired to green. That means the Bollinger Band went above the Keltner channel, but the momentum is downside. So you will not trade it here because you're looking at a bullish chart. And then the same thing happened here. You can probably trade it here for a few days, but not much. Again, you have one more TTM squeeze firing here. As the TTM squeeze is ending, you have seen that the momentum is picking up, and then you have seen a gap happening. And then one thing that I think like we don't see in this TTM squeeze, and I have personally noticed, is like when the squeeze is ending, if the stock gaps up, that's when you buy. That is my personal choice. See, if you just look at TTM squeeze, you would have traded HTs like 1, 2, 3, 4, 5, 6, 7, 8, 9 times in the last 1 year. But what I'm feeling here is like, I don't like to trade any stock that's coming out of the TTM squeeze with a normal move. I really, really like the stock to make a gap up, and the TTM squeeze is ending, and then that's where I will enter the trade, and then I will trade that stock. So we can look at Facebook here. It's basically choppy right now. There is no proper setup here, and here is a proper setup. Here is when it's making big moves with some gaps, and then this is where you have to really enter, right? And one more thing here. It's just downtrend stock. I mean, I don't see a reason why I would play bullish play on Baba until recently, where it made a double bottom here, and then it's reversing here. So it's actually in a squeeze now. It is firing to the upside. You will have to wait for the squeeze to finish, turn green. You have a squeeze actually happening right now, and then the momentum is upside. It made a double bottom, and then it's trying to go up, and then you'll have to monitor for the next couple of days to see if the squeeze will end, if the Bollinger Band will come out of the Keltner channel, and then the momentum is upside. Then I personally believe like this can go easily to 150 or so. So this, in a nutshell, is how we use TTM squeeze. TTM squeeze, what it does is it basically looks where there is a squeeze, and then whether the stock is going to break up or down based on how we want to look at it. I'll show you some recent examples that I personally like. Like this is like A plus setup. Like this setup, this is something that we need to memorize in our brains, like forward right here, what happened from here to here. This is something that we have to memorize, and this is perfect setup to trade forward right here. So let's look at what's happening. So the stock is trading up with an ER gap up, and it's actually on an uptrend, and it also had an ER gap up. And from there, everyone thought like it will just go all the way up, including me. But then it decided to trade sideways for I think 1, 2, 3, 4. I think from 11/8 till almost 20 days, it traded sideways. I think it traded sideways, and then you can clearly see the Bollinger Band is inside the Keltner channel, meaning the implied volatility has gone within the average true range of this particular stock, and then it's actually making a move with a gap. You see here, the big gap. That's the day that we have to get into the stock. We can actually enter it here as well. I mean, this made a big, good gap here. You can actually enter into the stock right here with a good gap. And we have to basically look at these stocks. We have to look at them, and we have to like keep them on our watch list, patiently waiting for the stock to make a big gap. Because what happens is it will go up, go sideways, go up, and you can look at like 100 stocks. That's how they all move: go up, trade sideways, go up, trade sideways, go up, until it just gives up, and then come to a distribution phase. So this is basically an accumulation phase right here. And as long as phi is at least trading sideways or going up, the stocks like this will be trading upside as well. So I think I have seen one more example here. Qualcomm, it made a good gap up. It is actually trading sideways. See the weak stocks, you can clearly see, for example, you look at Roblox, right? So you can see the weak stocks, right? This stock has gapped up, but then it did not trade sideways when SPY is dropping down and doing all kind of tricks. It couldn't handle it. It was just dropping down with gaps. So you can clearly see a difference between a weak stock and a strong stock. See, Ford went up, traded sideways. It has gone through the same drama that Roblox has gone through, but Ford has actually traded sideways. That's how you know there is strength in the stock, right? And then you wait for the TTM squeeze to fire here, and then boom, you enter. And then if you had like, let's say like 50 at the money calls for the weekly, it's easy, like 600-700% returns within a day or two, right? So that's how you trade. And the concept here is that the standard deviation, though they measure the implied volatility, some people say that if the stock will hit the second standard deviation, it will revert back to the mean. But then there is a guy, he's called Sam Crescent, and he's an ex-market manager. And what he says is, if a stock moves above 1.5 standard deviation on a daily chart, on a 20-day simple moving average, it tends to go higher. It may not touch the fourth standard deviation, but it usually tends higher, right? So when you see a stock actually making a move above the 2 standard deviation, the red line here, or 1.5 standard deviation here, that's when you know a stock is going to make a bigger move. And right here, see, it made a move outside the 2 standard deviation, and then it made a bigger move here. So we may have to look at this on a granular level. That's why I try to mix the time frames on my charts. This is how I personally trade. This is Ford, for example. What I do is I scan for stocks which are in a squeeze and which have a high dollar volume, and then which have gapped up pre-market. You see, when a stock is, this is a squeeze, this is a daily squeeze. Though I'm looking at 5-minute channel, I have plotted a daily TTM squeeze on my chart. I can share this, these indicators in the group later. But the point is, if I have to catch it on a 5-minute chart, I need to plot a daily TTM squeeze on my chart here. So I wouldn't trade all these days here. So let's say 90-day 5-minute, for example. If I go back, will I trade all these days here? So this is where I know Ford has entered the consolidation. See, the red line has started here. That's consolidation, right? See the red line? It's all consolidation. It's all consolidation. It made a big move here. Maybe this is a day that I think I traded this, but then it did not follow up. The TTM squeeze did not turn green, right? But then look at here. The red TTM squeeze has finally fired. There is a gap, and I also use the ORB, and then it just broke the ORB. TTM squeeze has fired. There is a gap, and then there is a good move to the upside, right? I mean, we are looking at like 21. It touched around 25, and if you're trading and at the money calls on Ford at around 22, you would have made a good significant percentage. So let's look at AMD and see if that made any moves here. So let me go back. So we have a squeeze here, and then it's actually breaking to the downside, right? I would have not took this trade because I ideally want AMD to go up, trade sideways, and have a squeeze somewhere here, and then gap up. I don't want it to be gapping down because it has such a solid move. And then if we really look at it here, it made such a solid move here, and then it's also making a sideways action here. As long as we have this pattern here, this is a bull flag. As long as we have this pattern here, and then you have a squeeze in play and then it is gapping up, that's when I would personally like to buy a stock, right? It's like this is AMD, it's actually went up, trading sideways. I want it to be in a squeeze, which I think will probably happen pretty soon, and then gap up and go. That's the setup that I personally like on stocks like AMD that made a significant move, did not fall down like how we looked at Roblox, or you can look at TDD. See, it went up. Maybe it's a gap fill here, but I don't know. I mean, it has to really trade sideways. It just cannot fall down like this. This is a sign of weakness. This is not a sign of strength. And if you're trying to trade something like on a bearish, you have to basically wait for a stock to go down, trade sideways, and then go down again. Let's look at AMC. It's a classic example that I have traded recently. Let me share this. It has gone down. AMC has gone down, traded sideways. During the sideways, there is a squeeze. And then when the squeeze fired, it is bleeding down. There was some news regarding GME, so it shot up, but again, it couldn't sustain. It went down. If it is a downside, you want the stock to go down, trade sideways. When it is trading sideways, you need to have some kind of squeeze. There should be some kind of gap. And then once you find the gap, you just buy in the direction that it is going, right? You do not fight the trend, and you basically go with the flow of the trend, right? So you need to understand like bull flag and a bear flag pattern. It's nothing. I mean, we can just look at this classic stock here. Bull flag is nothing but like you just have a big move up, it trades sideways, and then it will take the next leg up like this. And then when the flag is forming, you want the Bollinger Band inside the Keltner channel. You want the TTM squeeze to show you red. And then when it has fired, that's when your buy signal. Now, like all indicators or all strategies, this is not 100%, but the probability of making money using these strategies is high, right? So let's look at one last chart on the daily, right, for example, and then see how gaps actually make the stocks move. So if you look at Tesla, for example, though you don't have a squeeze, when you have a gap up, it tends to go up on a stock like Tesla, right? If you see gap up, it's more or less like you're gonna see a higher momentum. And after a good consolidation to the sideways, it couldn't handle it, but that's how I usually trade. I look for gaps, and I look for stocks that are actually going up or going down, like AMC with high ADR. So that's in a nutshell what the strategy is. You will have to really plot these indicators on your chart and look at these charts for like hundreds and hundreds of charts, right? And then preferably look for charts that the stocks that have made a big move up or down. I think I've seen one setup sometime back. DocU, right? So DocU, for example, DocU made a big drop here on the earnings, and it went all the way from like 229 till 134 something, 131. And I was actually short here. I took a short position, I think the second day here. And then what it did was it was just going sideways. And my puts, I think I sold for like a significant loss on this stock, because I thought it will be just gap down and then it will just go down. What it did was it basically traded sideways. Now, if you see, the Bollinger Band is inside the Keltner channel, and then the TTM squeeze has fired green, meaning it's actually breaking down here. So this probably might be a short entry. This is where I should have basically bought the puts. Nonetheless, I made a mistake, and I should be waiting for the squeeze to trigger and then fire. So this is a high probability setup, right? Mainly when we are trading options, because we are dealing with time. We want to time it right. So if you want to time it right, the only way is for us to see, like there is a small squeeze here. It gapped up, dock Q, the same stock that went down, it gapped up. And from there, I think it gapped up at around 209. Let's assume we got in somewhere at 220. It went all the way to 314. Look, the squeeze here, gap up, boom, went up. So we really need to spend some time in looking at these charts and then finding these setups. That in a nutshell is how we basically use Bollinger Bands, Keltner channels, and then a combination TTM squeeze. TTM squeeze is nothing but these lines. I mean, you can really remove these lines and then purely trade using TTM squeeze if you wanted to. I mean, just look for a gap, look for a squeeze, wait for a gap, buy. A stock with a gap, when it is in squeeze, will make a bigger move. That's called, that's basically how stocks work. Like it has to gap up on a consolidation period. That's when the move will be really, really high. So like combination of squeeze with gaps is what something that you'll have to look at. That's pretty much it about the setup. And I'll go to the questions and see all the questions that we have here. John Carter, Sival Party. Yes, that's John Carter. I remember his name. Can you please comment on where to and how to set up these bands in Thinkorswim? So you go to studies, you click edit studies, you go to Bollinger Bands, you add Bollinger Band, you type Keltner channel, you can add Keltner channel. I will just leave everything as is. I will not change anything. Maybe I will change the colors because I don't like these colors. And then TTM squeeze, you just type TTM squeeze, add selected, and then apply, and then add, and then you have everything here. So is Bollinger Band leading indicator? When can you say it is real? Can it expand like false breakout? Yes, Bollinger Band is a lagging indicator because it tracks the 20-day simple moving average. So Bollinger Band is basically a lagging indicator. It's not a leading indicator. And it can expand for sure on false breakouts. And to basically avoid those false breakouts, you will have to look for gap up or gap down scenarios. So you can actually trade a proper setup. Your probability will be high. I think except price, all are lagging. Yeah, everything is lagging except price and volume. I personally like, so what I do is, I don't usually trade all the setups. What I do is there is something called volume profile. I don't want to take time to explain this. This itself is a different topic. So I usually try to trade stocks that are above the volume profile. Volume profile is nothing but what is the price point where there is huge volume? And I try to trade these setups which are outside of the volume profile. For example, AMD, this is outside of volume profile because that means these are new buyers and new sellers. These are all new buyers here. These are all old buyers where consolidation is happening. So I try to trade these setups when the stock is above or below the volume profile. For example, HD, same thing. I try to trade it when it is going up. Qualcomm, for example, let's look at Qualcomm. I like this setup. It's trading sideways. If it trades sideways and if it comes out of the channel, that's when I trade it because it is outside the volume profile. There could be some squeezes happening within the volume profile. I don't trade them. That's me personally, right? And then you guys really have to look at the charts along with volume profile or whatever you like to build your own conviction. This is me, because if a stock makes a gap up above the volume profile, I know I have a good edge already. And then if it is making bull flag, I know I have a better edge now, right? So when it fires, I know when to take a trade, right? So that's how I do, because I've built a conviction by looking at many charts. So you can plot a volume profile. So it basically plots two lines here where you have the majority of the volume, and then when the price breaks above or below, like let's see DocQ if it is below DocQ. It's still like, this is where the huge volume is. Like when it breaks below, I think it will be massive if it just goes down, like it just goes down. But then, yeah, I like these setups. Like when I was trading this, the volume profile was somewhere here, like this line was somewhere here. So I like these setups. Same with the classic Ford. I mean, I'm in love with this chart here. Like it just broke above the volume profile, traded sideways, and going the next level up above the volume profile, right? So this is my setup personally. So let's look at the other questions that we have. Apple 8.2, 8.16 on daily. Could you please explain? Let's see quickly. 8.2, where is 8.2, 8.2, 8.2, 8.2 to 8.16. Look here, see here the stock actually tried to break the volume profile here. It couldn't. I would have took the trade here. There is no doubt. Without zero doubts, I would have took a trade here. Only to realize that I would have took a major loss here. Not a major loss, but you know, whatever loss it is, like 1% of my portfolio, I would have took a loss here for sure. It's like it's breaking above the volume profile. It's coming out of a squeeze. I am here in this trade. And then if I did not lock my profits into the second or third day, then I would have probably seen significant loss here. Not significant, actually, I should not say that. It's like 1% of my portfolio loss. But then again, guys, like if you see a gap up, if you see a squeeze coming out, try to lock the profits within 5 days. Within 5 days. And after 5 days, you never know what's going to happen. So that's like an ideal time that I have seen with options. So if you're just trading the stock, I think you can stay for a long time, but with options, just try to lock everything within 5 days. So that's Apple. I think I checked Facebook, I checked Baba, NVDA, please, and AMD. We looked at Apple. I think Apple is right now, it's not in a squeeze. It looks like it's in a downtrend. It has to trade sideways for some time and then break above. And since it is above the volume profile, this would also be a good setup. AMD, I think we have looked, it's actually trading sideways so far. It has to stick at this level, 130 level, as long as it does not break under the 130s, consolidates, and there is a squeeze and fires to the upside with a gap. That's our buy signal. And what else are you guys asking? NVDA, let me see NVDA. So we have 9 more minutes. NVDA is actually squeezing up here, see? NVDA, there is a squeeze that has triggered here. You really want to have it trade sideways and then gap up for the next leg up. But then, you know, SPY also should be at least trading sideways. The overall market also should be at least trading sideways, if not upside, for these breakouts to work. And then if SPY is actually breaking down, that's when you switch sides and you look for the weak stocks. Like there are many weak stocks. I mean, I think I'm personally shorting Riot. I'm shorting Riot. I'm anticipating that it will break down here. FCL. And then what is the other stock that I'm shorting? AMC, one stock I'm shorting. A couple of other stocks that I'm shorting because SPY couldn't just break up. It's just trading sideways, going low. So that's when you have to catch the, you know, stocks that are dropping below. The volume profile for this one has changed recently, and then see, it traded sideways and then it went down. That's generally how it works for the most part, right? So Bank of America, if you have a squeeze like this, it's a good setup, but it's for the most part, it's really choppy. But then when it breaks the volume profile, see, this is perfect setup here, right? See, squeeze, gap, firing above the volume profile, making new highs. I think this is the 52-week high here. So this is a setup that we have to trade. I think I posted in the chat as well to long banks when this happened. This is on 1-3. I think if I go back to my chat history in the options group, I mentioned that we have to long banks, not just Bank of America, everything. F created gap up, so it will come down to retest possible can you please repeat what is the green and red dots mean in this indicator? Red dots means that the stock is trading sideways and it is consolidating. Green dots means it has come out of consolidation either to downside or upside. When it is going downside, you can see the TTM squeeze that these bars will be pointed to the downside. When it is breaking to the upside, you can see these bars will be pointing to the upside when it is coming out of the squeeze. Again, this itself is not a holy grail indicator. It will just show you like when stocks make a big move up, make a sideways move, and then taking the next leg up, you can actually watch these TTM squeeze red dots to hold, so you don't buy the calls and have the theta kill your calls or puts, right? So you buy when you have a signal here to whichever direction the momentum is showing. I personally like trading in the direction where it was heading long term, and then if it is actually breaking above the volume profile with a gap, I like to trade it to that direction. That's personally me. So okay, so that look at Baidu squeeze first happened. Baidu here, yeah, there's a squeeze. It did not come out of the squeeze yet, but you can clearly see it's trying to break to the upside. But then when there is a gap up, I think it's a good call to take a couple of calls on Baidu. I think it's basically going along with Baba. I mean, look at this Baidu, like this is the volume profile. You don't even have to draw support resistance. You just need to have the volume profile. Like, look, the price tried to come here, again bounced. Second time, third, fourth, fifth time, it just couldn't break this volume profile, and then it's trying to reverse, right? So Baba, I think it made a double bottom. Baidu, I think it made like more than 2 attempts to break this, couldn't break, moving up. So this is a good setup, Baidu right here. So Vishwanathan Murugesan, what is ORB? ORB's opening range breakout, it itself is a different topic. We have a couple of videos. The first session, I think we covered ORB, so I would encourage you to read that. If not, then we can explain you in the chat at a later point, because ORB itself is a different topic. So what can happen to AMC, LCID? I think Lucid is probably bullish. AMC is bearish. That's my view. Lucid is basically bullish. The reason why I say Lucid is bullish is like it's basically breaking the volume profile now, and it is in a squeeze. I really like the squeeze to be like for a few more days, but you know, we are not the one who would decide it. So it's actually breaking the volume profile. It doesn't have a gap again, but then it made a solid move when most of the stocks are going down on Friday. So I actually made a trade on Lucid on the day. See, when it's in a squeeze here, that these are the red lines, and then when the price has crossed the 1.5 standard deviation, somewhere here, I think I took a trade calls for, I think I took 55 calls for a couple of weeks away or 3 weeks away. So I know like 55 is too far, but I usually try to play far out of the money on names like Lucid. So I think Lucid is heading up and AMC to the downside, because I'm already bearish on AMC. I have puts on AMC from quite some time, and I think I have good returns on them already. STNE, I don't know what is STNE. I've never heard that name. I mean, it's a dead stock, in all honesty. Like, it just couldn't break like 13 here. If it reverses, like, it probably will reverse upside, but I don't really know. It looks like a dead stock to me. But then if you're really following this, it's probably forming a solid base here, consolidation, and look for a gap up above like, let's say 20 or something, and then you can probably take a long trade here on STNE. Is TTM squeeze that you added is correct? I understand John Carter's one is different. That's a TTM squeeze. That's a licensed indicator by Thinkorswim. Can we use TTM wave with the TTM squeeze? If yes, how? TTM wave is just shows like Just shows the direction. It just shows the momentum, which side the momentum is. It's nothing more or it's more or less same like a TTM squeeze. Does longer squeeze versus shorter squeeze? Yes, the longer the squeeze on a stock that is above the volume profile, the better it is. I mean, you really need to look for the stocks that are squeezing above the volume profile. That's a golden setup. You can add TTM scalp indicator too. It will show, yeah, TTM scalper indicator is good, but it will give me too many up and down arrows. Actually, I don't like it. I don't like it. Just me. I mean, if you like it, that's fine, but it gives me too many up and down arrows. I don't like it. We have one more minute, so let me see if I can. How to set up TTM scan quiz. Now, for scanning, you can just go to scan, and then you can just add a filter steady, and then license studies, go to TTM squeeze, and then add any other filters, and then just scan. It will show you all the stocks in the stock hacker. Yeah, it will basically show you all the stocks that are in TTM squeeze. You can do it by going to license studies and TTM squeeze scan. You can run it, it will go you all the license here. Can you share the last shown TO script? The one shows ORB for daily. The ORB scan script is in the chat. I think it's on the Google document as well. So you can find the ORB script. If not, then I can share it again. Can you show how the volume on the left of the chat? So that's, I really want to close it by, so edit profile, you go and then you search for volume profile here. Volume profile, add the volume profile, click the settings, on expansion, no, reduce the opacity to 10, click apply, and that's how you get the volume profile on the left. Is the comment pullback weight your own chart in this chart? Pullback weight? I don't know what that is. If you can elaborate in the group chat, then I can help you there. What do you mean by above the volume profile? This is volume profile. This line, this is volume profile. That means that's where the majority of the volume is. So if it breaks above or below this line, that means there are new buyers or sellers coming in. That's what volume profile is. You said TTS squeeze and gap up is indication buying call. So what is opposite then? Opposite is TTM squeeze with a gap down. How do you decide to exit point? I usually use a 5-minute 21 or 20 exponential moving average as a trailing stop loss on day trades. For swing trades, I use a 10-day simple moving average on a daily chart. Can you please check Roku? Roku is breaking down. See, TTM squeeze going down, fire to the downside. It's under the volume profile. Classic example. See, it traded down. I know I'm taking little more time here. It traded down, went sideways in a squeeze, breaking down. So classic example for downside Roku. ENPH. Okay, ENPH. Well, I mean, it's pure downtrend, man. I mean, there is no squeeze here. Maybe it has a squeeze somewhere here, and then from there it just broke down. 137 may be an area where it may bounce around because that's where the volume profile is. If it breaks 137, it probably just may bleed down. Bank of America, I think I've seen the chart. Citibank is pretty much same, but unlike Bank of America, Citibank is under the volume profile with a gap. Not a chart that I like. I like Bank of America more than Citi. I think we looked at STNE already. We look at Amazon. Amazon is just choppy, man. It's just going sideways. It really need to just make a big gap up and then just kill everything. How to set up volume profile? I think I showed that. EKS. So there are so many questions, guys. So we will close it by 2:05. 3 more minutes, guys. 3 more minutes. EKS. So it's just dead stock. There is no volume. I don't see anything. It's just bleeding down. Don't hold these stocks if you guys are holding anything like this. I mean, there's just, can AMC ever go back to all-time high of 72? I don't think it can ever go. I think the dynamics have changed. There is no short squeeze like there was in the past. The float has changed. The structure has changed. I've seen a news where the CFO has been like selling his shares left and right on AMC. I don't really know if it will go to 72, man. I'm just fully short on AMC at this point. STNE, Buffett invested a lot on STNE. I don't know, man. He would have. I don't think Buffett would have holded a stock from 95 all the way down to. I'm probably thinking Buffett is probably the one who is selling this, maybe, if it was just me. PLTR broke the volume profile. There's a squeeze here. It looks like it's breaking down again. It fired up again. Hello. It's breaking the volume profile right here. You may want to wait for a squeeze to see if there is a squeeze that's happening. But then, yeah, it's literally breaking the volume profile here. A downtrend here. I mean, I use volume profile a lot. Shall we follow daily or hourly chart? So I use daily chart to form an opinion, bullish or bearish, and then I switch down to like 5-minute chart to do the day trading. But then I also use like the daily TTM squeeze, and then I use the hourly EMAs. I mix and match everything. There is no one time that's good. You have to really look at many time frames. But I like daily. What do you mean by above or below volume profile? Above the volume profile means it is bullish, meaning new buyers are coming in. Below the volume profile means it is bearish. That means new sellers are coming. New sellers means the short sellers, or the people who are just, bag holding, just want to just sell. And the new short sellers are coming. Above the volume profile is this. There's no volume here, right? See, 70% of the volume is between these two lines. If the stock is breaking up and going out away from it, those are new buyers, new institution, new money, everything new. Okay, we are at 2:05, guys. So if I miss any of the questions, I see there are a few questions. Please post them in the group chat in the Thinksabio options or in Thinksabio stocks group. And I'll be more than happy to answer all of your questions. I think I missed a few questions like Prashant, SD, Space, Fubo, Docu, Upstart. But then for sure, please post your questions in the group chat, and I'll be more than happy to look at those charts and post the charts and answer your questions. In the interest of time, I'll be stopping this session, and I hope you learned something today, and we'll talk next week. Thank you so much.
Thank you, Deviate. Thank you, everybody else, for joining.
Thank you all. Have a great day. Bye.